Assalamu alaikum everyone. Welcome back to my channel Rapid Revision. Today's video is about the beginner level statement of financial position. So this video is specifically is not for grade 11. It is for grade 9 or grade 10 or students who have just started their accounting in O levels. And basically I need to first tell you guys that what is the definition, like what are the subtypes of assets. So assets can be of two types. One is non-current assets and the other one is current assets. Non-current assets are basically they last for a longer period of time, usually more than 1 year. So basically these give us the benefit for more than 1 year. So non-current assets benefit the business for more than 1 year, and current assets however benefit the business for less than a year. So that is why they are called current assets. Non-current assets are also called fixed assets. Non-current assets are also fixed assets. Current assets are basically current assets. They benefit business for less than a year. Then we have non-current liabilities. So non-current liabilities are basically repayable after 1 year. So liability is basically when we owe something to someone, right? When we owe some money to someone. So that basically if you need to repay that money after 1 year, so repayable after 1 year will be non-current liability, repayable after 1 year, and current liability will be repayable within 1 year. So repayable within 1 year. So that is why we call this we call it our current liability, which is repayable within 1 year. So that is important, which we need to know because this will also be part of the statement of financial position. So statement of financial position, also when we write the short form of it, we call it SOFP. SOFP is basically based on this formula: assets is equal to capital plus liabilities. So when we have our statement of financial position, so the trial balance that we have been given, so from that trial balance we'll basically pick up some values. So we'll basically take the values for non-current assets from the trial balance and write them over here. So non-current assets which last for more than a year: motor vehicle, machinery, fixtures and fittings, premises, land and buildings. Then we can have furniture, then we can have computer equipment as our non-current asset. We can have machinery is right here, but fixtures and fittings, or office fixtures can also be your non-current asset. Office equipment can also be your non-current asset. So all of these, computer equipment is also a non-current asset. All of these will be written as non-current assets in the statement of financial position. Then we list all the current assets. So inventory, we need to write closing inventory over here, because you guys should know that statement of financial position is always made on the last date of the year, because this basically it's made on the last date of the year of the financial year. So let's say my year is ending on 31st December 2024. So this basically will be made on the last date, that is 31st December 2024, last date of the financial year. So last date of the year. We'll prepare a statement of financial position, and then we'll have current assets. So current assets, we'll have closing inventory. So closing inventory is the last date inventory. Then we have trade receivables. So trade receivables, what our customers owe us at the last date. So whatever credit sales we have made, but the customers owe us some money. So that amount is basically my receivable, which I'll receive in future. That is why it's my current asset. I'll receive it within 2-3 months from my credit customers. Trade receivables are also called credit customers. Then we have money in the bank. So whatever value of money we have in the bank, it's my current asset. Then the cash value. So cash can also be cash in hand. So whatever cash we have in our drawer, that is also our current asset. Bank is also our current asset, because the value for bank keeps changing on an everyday basis. Similarly, the value for cash also keeps changing. As soon as we spend some cash, we get some cash, all of that is basically going to change the value for cash on an everyday basis. That is why cash is our current asset. It's not our non-current asset. And then we have the capital section. So basically we need to add the total of current assets, and then we total non-current assets plus current assets will give you total assets. So this is my total assets value. So total assets should also equal to the sum of capital plus liabilities. So the second section of the statement of financial position, is the capital section and the liabilities section. So in the capital section, we need to know the formula for capital. So simply we, whatever capital is given in the trial balance, we start with that, and then we add profit to that. So whatever profit we have calculated from the income statement, we'll add profit for the year to the capital at start, and then we will basically subtract the drawings. So the drawings can be both goods drawings and cash drawings. So you will add both of those drawings. So cash drawings is normally in the trial balance. Goods drawings is normally written in the additional information. So cash drawings plus goods drawings will be subtracted from here. So this is the value that we are getting here. This is basically my closing capital. Closing capital means my capital at end, because of the business activity capital basically changes every year. So because if we generate profit, that means our capital should increase. That profit will be reinvested in the business in order to expand the business. And drawings should be subtracted, because drawings is what the owner took back to their spent for their personal, personal expenditures, or the goods they have taken out, they have used it for their their personal use. So that basically is subtracted. And then we have the liability section. So the liability section, we have two important headings here. One is the non-current liabilities, which is usually a bank loan or a loan from someone who, let's say a loan from G Blake, it's given in the question. So loan from G Blake is also going to be your non-current liability. Loan is always a non-current liability unless in the question they state that it's repayable within some few months. Otherwise, the default of loan is always a non-current liability. Then we have current liabilities. So in current liabilities, we have two important current liabilities. One is trade payables and the other one is bank overdraft. So it's important to note that either you can have a positive balance in the bank. So if you have a positive balance in the bank, that is part of your current assets. If you don't have positive balance in your bank, then that should be part of your current liabilities. So that will be your bank overdraft. And bank overdraft is basically a liability. It's when we owe the bank. So when we have overdrawn our bank. So let's say there were $10,000 in the bank, but we have taken out $12,000. We've spent $12,000. So that means now I owe my bank $2,000. So that's it for my format for statement of financial position. One very important thing here, and normally students keep asking me this, because when they're in grade 9, they are sort of, very new to the income statement and statement of financial position, and they just get confused with where to write what. So one very important thing here is that in statement of financial position and income statement, both these columns that I have prepared, these are only dollar values. These are not debit column and credit column. No, that's not debit column and credit column. It's simply a dollar value column and a dollar value column, so that I don't need to write again and again dollar, dollar, dollar for each value that I'm writing in this income statement or statement of financial position. Also, one more thing, simply I need to calculate, okay, revenue minus sales returns. I can also write this thing in the first column and then write the net sales in the second column. That is also possible. But then, I need to, for cost of sales, I need to write all the calculation in the first column and then the final answer for cost of sales in the second column. Now this basically improves my presentation. Now when I do net sales minus cost of sales, I get my gross profit. But if you look at it, it looks very clean when you have a proper presentation here in place. So because where we have too much calculation, we use the first column. When we have too many numbers to add up, we use the first column, because cost of sales is like a long formula. When for other incomes, if I have three incomes here, I need to use my first column, write each of the three incomes values in the first column, and then total in the second column. But if I just had one income in a question, I can directly use the second column also. For other expenses, again, I need to use the first column for writing each of the expenses and writing each of the values of each of the expenses, and then write the total in the second column. So it just improves the presentation. And then profit from operations, obviously I will get by subtracting the total expenses from this value. And then when I have got the profit from operations, I can directly subtract interest expense in the second column, because it's just one expense, and then I will calculate profit for the year. That's it. um, for the statement of financial position, again, you can also use the first column to write the value of each of the non-current assets, and then write the total in the second column. But you can also use the second column to write each of the value of the non-current assets, and then write the total right here, right below the all the values. And then for current assets, you always use the first column, and then write the total in the second column, and then you do total non-current asset plus current assets, so you get total assets. And then for capital at start, add profits for the year less drawings, you always use the first column, because again, it's a proper formula. The final answer will be written in the second column. And then for non-current liabilities, because I just have one non-current liability, I'm directly using the second column. If I had multiple non-current liabilities like two loans, so I would have used the first column, and then written the total in the second column. And then for current liabilities, again, I have multiple current liabilities, right? I have two current liabilities, so I'm using the first column, and then I will write the total in the second column. And this balancing figure, so total assets should equal to the sum of capital and liabilities. So how do I get this value? So when I add closing capital plus the bank loan plus the current liabilities, I will get this value, which is my important value. So what is happening here is that accounting equation is balancing. Assets is equal to capital plus liabilities. So capital plus liabilities is one balancing figure, and total assets is one balancing figure, and that is how I balance my statement of financial position. I hope this helps you. Thank you so much for watching.